Let's get right into today's explainer, guys. We're looking at the hidden financial risks hiding inside agency-provided malpractice insurance for locum tenens physicians. A lot of locum docs just take whatever coverage the agency hands them. They don't ask who owns it, what type it is, or honestly, what happens when the gig is up. So today we're bringing some serious data-driven clarity to this so you can protect your hard-earned income. Here is the game plan for today. First, we'll hit the coverage gap nobody warns you about. Second, we'll break down the two policy types. Third, we're talking tail and nose coverage. And finally, we'll wrap up with your locum malpractice checklist. All right, part one, the coverage gap nobody warns you about. So most locum physicians just blindly accept the agency's coverage, right? But this creates a massive exposure. Think about it. What actually happens when your locum assignment ends? Well, the second you leave, any future claims filed from that working period are entirely unprotected unless you've put explicit safety nets in place. Because let's face it, these claims can surface months or literally years after the fact. It's a massive, gaping hole in your coverage that opens up the exact second you walk out the door. Without tail coverage, absolutely everything that happened during your assignment is suddenly exposed the moment the agency's policy lapses. You're basically left holding the bag for a massive potential liability. Moving right along to part two, the two policy types. Okay, so you've basically got two options here. First is an occurrence policy. This protects you forever for that specific date. The coverage literally follows the event, which is amazing. But then you have a claims-made policy. This one only covers you if the claim is filed while the policy is still active. If your policy lapses, time is up. Any claims made after that, you're entirely on your own. To put that into perspective, imagine your assignment ends on day 90. At that exact point, the policy window completely closes. Now, imagine a claim is filed on day 365. Because the policy is dead, that claim just falls right through the gap. There is zero coverage. And unfortunately, this is the exact structure most locum agencies use. Which brings us to part three, tail and nose coverage. Tail coverage is your best friend here. It doesn't extend your active day-to-day practice coverage. Instead, it acts as a backward-looking shield for the assignment you literally just finished. It basically extends the reporting window so you can report claims for past incidents. Without a doubt, it is your only shield against a delayed claim. But the numbers behind this risk, they are absolutely staggering. Tail coverage is going to run you anywhere from 100 to 200% of your annual claims-made premium. So let's say you have a standard $20,000 premium. You are looking at an out-of-pocket tail cost of roughly $24,000 to $44,000. And if you're in a high litigation state, that can push all the way up to 300%. It's wild. So the $40,000 question is, who pays for this? Responsibility for this massive bill varies wildly. Sometimes the agency provides it automatically. Sometimes they only do it for long assignments. Other times, the physician has to purchase it out of pocket. And here's a huge red flag. If your contract is completely silent on who pays for the tail, you absolutely have to address it before signing anything. Now, what if you're transitioning directly between agencies? You might actually be able to use something called nose coverage from your new insurer. So instead of extending your old policy forward with a tail, nose coverage allows your new policy to reach backward to your original retroactive date. It is a brilliant alternative that can literally save you 5 figures with just a single conversation. And just a quick note here, some top-tier agencies eliminate this whole negotiation by offering modified claims made. This is essentially the gold standard. It's a claims-made policy where the tail is pre-funded by the agency right from day one. If you see this on an offer, take it as a huge win. It gives you absolute walkaway security. All right, let's wrap this up with part 4, the locum malpractice checklist. You have to meticulously run through these 3 steps before you even think about accepting a locum assignment. Guys, this is the shield protecting your entire medical career, so do not skip this. Step 1, ask the agency directly about the policy type. Make them give you a clear answer. Is it occurrence or claims made? If it's claims made, you need to know the exact retroactive date so you understand precisely how far back your coverage reaches. Also, find out if it's a standard policy or that modified one with the pre-funded tail we just talked about. Step 2 focuses on tail coverage. Verbal assurances mean absolutely nothing here. You have to ensure the tail coverage responsibility is cemented in your contract's ink. If you are the one responsible for it, get the exact estimated cost immediately. Or start asking your next agency about nose coverage. Step 3. Validate your coverage limits. Standard limits are usually $1 million per occurrence and $3 million aggregate, but you really need to verify if this matches your specific risk profile. If you're in surgery, obstetrics, or the ER, you might require significantly higher limits.
And finally, always demand your certificate of insurance, your COI, before day one. Agencies are aggregating thousands of providers, right? You need the actual documented proof of what is dedicated to protecting you specifically, not just the master policy.
The type of malpractice coverage you have matters just as much as whether you have it at all. Let that sink in. A claims-made policy with an unaddressed tail is basically a financial ticking time bomb. Knowing that a single, unaddressed coverage gap could easily cost you $40,000 out of your own pocket, are you going to ask about it on your very next contract?